a Bachelor's of Development and Economics from Makerere University. Join me in welcoming Mr. Gerald Otim.
Thank you. You know, these days we are very careful to talk about our courses because a number of courses have recently been expired. Mine might also be one of those. I'm not very sure. I haven't looked through the list myself. But it's such a pleasure for me to be here for many reasons. One, that Kaivan is a very good friend of mine and one of the entrepreneurs that I personally look up to. I feel very inspired to be on this panel with him. And I think that you guys have even a lot more to learn from him than you probably do from me. But I hope that you will be able to learn one or two things from me and that you will leave here inspired. I've been a startup founder for many years. I know the definition I don't know if we still fit in the definition of startups. According to Kenneth. I've always believed that a startup is a business that is looking for a repetitive business model. That's my own personal definition of a startup. So according to that definition, I still think that we are still looking for a repetitive business model. So I've been running Ensibuuko for a number of years now and very happy to share a few of the lessons that I've been able to learn running the business here. Thank you.
Awesome. Very nice to have you here today, Gerald. So, this path of entrepreneurship that we have taken, it's not for the faint-hearted. One reason when people ask me why I've done this job, I say because I've never had 2 days in a row that are the same. You never know what kind of problem you're going to wake up to find. So, given that it's quite a tough path, what exactly inspired you to start Ensibuuko and what convinced you to take this path of entrepreneurship?
So I always wanted to be an entrepreneur. And I think SACCOs, savings groups, were certainly something that I wanted to do something about. I grew up in eastern Uganda, in Teso to be specific, and with a single mother. And my mother actually started a SACCO many years. I was still a young boy. So I grew up and was introduced to SACCOs at a much younger age. So I saw both how SACCOs can transform communities and households, but I also was introduced quite early on to the challenges that they go through and the opportunities that they could present. So I would say at a high level, the inspiration to do something about SACCOs had a lot to do with my upbringing, but the aha moment, the real moment that I made the decision to become an entrepreneur, I think it was 2014 is really when it happened. Before that, I was working, I was at a full-time job. I worked with an NGO. And I used to teach entrepreneurship. So I worked with this NGO called Educate. And we used to go to high schools teaching entrepreneurship. And it was beautifully curated training program. And we used to talk about how entrepreneurs transform communities and helping young people identify that is within them so that they can want to be entrepreneurs. And in these schools, the guys that I used to teach, they used to refer to us as mentor. They used to use that word mentor. This NGO told us you have to introduce yourself as a mentor because you're not a teacher. So I did that, and it was quite interesting. So one time, I was recruiting students for my class, and then this young man walks up to me. I'd introduced myself as a mentor. So he walks up to me and says, what's a mentor? And I said, well, I wasn't very sure then, but I said, we are the types of people, we are like teachers, but we really help you tap into that is within you so that you can become the best version of yourself. And he asked me, how exactly do you do that? So I spent time trying to break down the strategies that we used to use to help these people really become the best versions of themselves. Storytelling, you used scenarios, we used games. I listed a whole lot of things. And this young man kept looking at me and nodding his head. And then he said, now I get it. So mentors are like artists, like performing artists, you know? If you're a performing artist, you go on stage, you use a lot of strategies to excite people and to entertain them so that they leave feeling more refreshed and happier. So that's exactly what a mentor does, helping young people get inspired to be entrepreneurs. He said there are two types of artists. There are those that go on stage and perform other people's production or other people's music, and there are those that go on stage and sing their own songs. Which one are you? So when he asked me that question, that's the moment that it occurred to me. So I took a step back and realized that for all this while, I used to tell other people's stories. And it was that moment that I decided that maybe it was time for me to try to build my own story so that I could tell that story when I inspire other people. I needed to walk the journey, so I know exactly what it takes to build businesses. Very easy to tell people how easy it is to build a business until you have done it yourself. So that's how I ended up here, really.
Wow, very, very interesting backstory. And so you mentioned that you grew up in Teso, seeing how your mom started a SACCO. Can you tell me a little bit more about the SACCOs and the VSLAs that Ensibuuko works with? I mean, what is your product exactly, and how do you help those SACCOs?
So if you asked me who is banking Ugandans, the people that are banking Ugandans are not the people we obviously think are banking Ugandans. When you ask people who is banking Ugandans, a lot of people will tell you commercial banks like Stanbic, Centenary, DFCU. All those guys put together are just banking a small fraction of the Ugandan populace. There, maybe, I think a few years ago, the number was about 5 million unique accounts. It's now probably improved because of agency banking, maybe to about 8,000. But there's 44 million people in Uganda. 8,000 is a very small fraction of Ugandans that need or require banking services. The majority of those people are really banked by, informal banking schemes like SACCOs or savings groups. A SACCO is an informal cooperative financial institution. Most times they have an office with a banking hall. People walk there, they open accounts, they save money and they borrow. They're cooperatively owned, which means the community that they serve actually owns that institution, and everyone that accesses services is a member. And if you have gone to Western Uganda, you've probably seen so many of these. Most of them are really large, tens of thousands of customers with big buildings and fleets of cars. They have really grown to become very instrumental in providing financial services. And then we have another segment which is called village savings groups. Now these ones, I think in Buganda, they call them chibinas, right? These are small groups of people that save in a box, and it's mostly about 25 people averagely, give or take, and these guys save money in a box, and this is where they borrow from, and this is also where they, if they want to save securely, this is what they do. And those are the types of customers that we focus on. So we focus on improving services for those types of entities.
Okay, great. So your fintech platform helps to digitize the operations and the financials of these SACCOs that you work with.
Yeah. So maybe just for the sake of setting context, in Uganda there's about 300,000 savings groups of all types and kinds. There's investment clubs, which are also savings groups. There's workplace-based savings groups, family groups that save together for Christmas, and then there's these women in the village that are saving mostly for economic reasons. 300,000 of those. And a lot of those, all of them, majority of them, are still keeping records of their transactions purely on paper and keeping most of their money in a lockbox. And then there is at least 10,000 SACCOs in Uganda. An average SACCO typically is about 1,000 members. Our largest SACCO is about 36,000 members, the largest on our platform so far, and there is a couple of others within the 10,000s. But an average SACCO, if you ran into one now out there, is on average about 1,000 members. And in as much as they are fairly more developed than savings groups, a number of those still maintain paper records. You know, they have a whole room just dedicated to files and folders. So if you want a loan, you walk in there, someone has to go through a heap of folders to find your file so they can look through your previous borrowing record and also see your savings history before they make a decision on whether or not to lend to you and how much. Now imagine, you know, how long they have to do that and how many more times they have to do that. Very painful, very inefficient. So what we do is help these guys keep all their records and data on a single platform. So typically, you know, we are, if you think about it, the QuickBooks of SACCOs and savings groups. All their financial records, we provide a digital platform that allows them to keep that. And most recently, we have now evolved from just being the QuickBooks of savings groups and SACCOs into a digital banking platform for them that also allows them to actually borrow directly from the platform. So if they need extra capital, they can come to us and they can go on the platform and take extra loans from the platform to further capitalize them.
Wow. So you're working with SACCOs and BSLAs that are completely offline before you met them. So they're having paper records. You know, how do you convince them to become digital for the first time and take that first step? Because I imagine they might have concerns about accessing internet or, you know, the difficulties of getting on this system for the first time.
Yeah, I think this the answer to this question is probably also relevant for startups that are targeting rural customers generally. If you are targeting rural customers, you provide an internet-based service, you will run into this same challenge. Very difficult. Imagine we have customers as far as Karamoja, and imagine getting those people on, getting them to use a smartphone, for example, is a challenge of its own, and getting them on the internet is even more sophisticated. And when entrepreneurs run into these issues, the obvious solution for most of them is just go offline, provide a USSD platform, which is great, but does have its limitations and really limits how far you can innovate. So what we have done is really, I would say, three things. One is really partnerships. So at the moment, if you are a SACCO that needs to use our platform is purely on cloud, so you access it on a browser. A SACCO can now use our platform even when they have run out of the internet. Okay? You continue to use the platform. You don't need to have an active internet bundle to use the platform. And yet, it still runs purely on the internet. And it's the same for savings groups. If you use our smartphone application, you don't actually need to have an active internet bundle to run the platform. You can access the service and use it without necessarily having internet, but it actually runs on the internet. And we also did build in some offline, online capabilities that allows the app to work in places that don't have a strong signal and then synchronizes in the background. A lot of these have really been partnerships. So we work very closely with MTN and Airtel, and we've been able to build and innovate some of these solutions with them, and it's really significantly helped us drive the uptake of the solution in these places.
Awesome. So you have been able to get zero-rated data from MTN and Airtel to help expand your product access in rural areas. Yeah, very, very interesting. Now, I mean, for these SACCOs that are transitioning from totally paper records, like how did you convince them that it is worth their time to actually digitize their data and to start using your platform?
So the thing about these types of customers is that one of the bigger things you'll invest in is education. Education and training is what you invest in heavily on. Now, for SACCOs, it's a bit different because they understand the benefit and value of these things, and they pay the cost of their own education and onboarding. So part of our actual cost is they pay upfront for their own onboarding. They pay us to do all the work for them. So they pay us to train them, They pay us to configure the platform for them, and then they pay for the use of the platform. Now for VSLAs, it's a bit different. So our model for VSLAs is that we don't recruit one VSLA at a time. We know people that already have VSLAs, have worked with VSLAs. Most of these are development entities and NGOs. They have put in all the work. They have created these VSLAs, built their capacity, and now they're stuck with them. Most of these guys are struggling to access capital, and they are not digital. So we have designed a business model specifically for those. You know, when you talk about development partners and NGOs, most people think, you go to development partners when you need grant funding. No, we don't. We actually sell a product and service to these guys. We think of them as customers. And we've designed a business model that targets them specifically as customers. And we offer a service. NGOs actually pay for a lot of services. They pay for M&E, they pay for training, they pay for so many things. And they pay for our service as well. So what we've done is that we've designed our platform to be a platform that allows NGO partners that implement VSLA programs to have access to reliable and timely data. So what we sell to them is data. And we package that and tell them, you need to pay for this data to get on the platform. And we do that, one, by providing a smartphone to the savings group, and two, by training and onboarding them, and three, by making sure they stay on the platform for at least 1 year. And the NGO pays entirely the full cost of all of that. So we charge a cost for every VSLA we onboard, and that cost is charged directly to the NGO, not as a grant, but as a fee for service. And once the VSLA has been on the platform for 1 year, they have seen the value and the benefits of being on that platform, and then we now start monetizing the service to them within that 1 year. So that at the end of the year, the NGO doesn't have to keep paying for this cost. The cost is now transferred directly to the groups. So that's what we do. Yeah.
Okay, very interesting. So you have an innovative B2B model where actually the NGO is paying the onboarding and training fees at first. Then after the SACCO sees the value that it's getting from your product, then they can be able to pay for themselves later.
Yeah, and I encourage that, especially startups that focus on rural farmers, rural people, I really encourage you to think along those lines, because I've met so many of these startups and they struggle with the same thing. Adoption is always an issue when you're building a product focusing on rural customers and rural farmers. Adoption is an issue, so you scale very slow. We started working with VSLAs, I think, it's now 3 years. We have 100,000 customers already in the last 3 years on our VSLA platform alone. And our VSLA business actually now brings in the same amount of revenue that our SACCO business does in such a very small period of time. And a lot of it is really that we have figured out that with this type of business, you need to identify what your barriers for adoption are and figure out an innovative way to eliminate that barrier. And sometimes that barrier can be eliminated by someone else that sees the opportunity, because it's difficult for these people to see the opportunity now. They usually need to be on the platform to see the opportunity, but someone else can help get them on the platform, and you don't have to do that for free necessarily. So that's what we have been able to figure out, and we have found that by doing that, we have been able to grow really fast. If you know an NGO in this country that works with VSLAs, there's a 90% chance they are a customer. There's a 90% chance they are a customer. We have 3,000 VSLAs already on our platform, with average 30 to 35 members each. As we speak now, we already have running contracts now to onboard an additional 8,000 VSLAs over the next 24 months. So by sometime next year, or the year after that, we should bring the total number of VSLAs on our platform from 3,000 to anywhere close to 10,000, which will make us we are, I think, even already, in Uganda at least, the largest digital platform for VSLAs. When we get to 10,000, we will definitely be the largest digital platform for savings groups, if not in sub-Saharan Africa, within the East African region at least. And that's the goal. And once you get to that, then you can always commercialize.
Wow, well done, Gerald, and the team at Ensibuuko. You guys have had a lot of successes over the years, and you have been able to raise funding and expand the business quite a bit. But can you tell me a bit about the very early days of Ensibuuko? But before there was any external funding, any investor funding, how were things like in the beginning? How did you first start it? How did you first fund the business?
So I'm a typical Ugandan entrepreneur, born here, educated here. I started the company here, and I ran into the same exact challenges that most Ugandan founders building tech companies run into. Difficulties finding good talent, difficulties raising money, and raising money is a whole lot difficult for Uganda. It's more difficult for black founders, but even extremely difficult for Ugandan founders because you run through the same issues. There's not a lot of great stories to be told here. So, investors generally don't want to invest in places with not such great stories. So you'll have to overcome a lot of things to actually get someone to write you a check. And we've been able to do that fairly well over the last couple of years. We've done 2 major investment rounds, and we have another one in the pipeline soon. And all of those really have been, a result of just figuring out how to tell your story well. This is what I always tell founders. I think at the end of the day, we founders, one of the biggest skills you will have as a founder is storytelling, right? You need to be able to tell your story because when you're still a young business, you don't have a lot of traction. So you need to be able to use the little traction you have to really tell the story well, and especially tell the story of opportunity. You need to be able to show people what the real opportunity is and how taking a chance in you can actually help them as an investor and how you're going to help them grow. And secondly, you as a founder are probably the biggest asset to your business because people invest in people, right? So besides telling the story of opportunity, you need to tell the story of how they can take a chance with you. Because to a great extent, the success of the business relies on how good you are as an entrepreneur, and you need to be able to demonstrate that. Because if they don't trust you, if they don't feel that you're competent enough, then it will be difficult for them to write you. There's already enough reasons why they shouldn't give you a check. And if one of those reasons is that they can't trust you, then it's very more likely that you'll struggle to raise money. So I find great entrepreneurs, brilliant ideas, smart, brilliant ideas, but they just cannot articulate the opportunity. They can't articulate why they are an investable founder. And that's usually the issue. And that's something that I hope that we learn to do better at. Yeah.
Awesome. Thank you so much, Joe. So I think we're going to move to the Q&A part of the session. So I hope you've all prepared some questions.
Thank you very much, moderator and our guest, Gerald Otim. It's really inspiring what you guys are doing, and it's really inspiring to find that you can actually have the time to talk to the rest of us and try to share your journeys with us, so that we can have an insight into what you guys have gone through, into the waters that you have already gone through. Thank you. All right, so now we're going to Q&A. So I'm going to start from here. Then.
Thank you very much. I'm going to ask both of you because I would like to learn from all of you. And my first question is, Ensibuuko, I would like to ask you the most unpopular idea you think has worked for you. It is like most founders are talking about it.
Yeah.
It's not known, but works for you. Then the second idea is, what do you think about things like Bitcoin being something that is has that inbuilt system to bank the unbanked people? And I have to be honest, I didn't know the things you're talking about, like being able to learn browsers and then store that online without having to use internet, is something really innovative. So, and you think about cryptocurrencies, and how do you, how is your system resilient to this kind of fact whereby the president can say, oh, because of elections, there is no internet for 2 or 3 days. Is the system resilient to that? Yes, that was that question. My question to the founder is it's going to be funny, but I think I would like to add from it anyway. How do you take the abstract world and like, if does it have to do with business, or do you use it anyway? I mean, the spirituality, the emotions, what those kind of abstractions, mathematics, and like that. So, and okay. Also, what about dreams? Do you think things like dreams have? You have ever dreamt something at night and it happened to your business, or do you ever? Like, anything like this has ever happened to, and it happens in your business? Oh, do you take them serious? No one asks those questions, by the way, but they are valid.
Maybe it's very. Can we just respond to this first, so we don't lose track? What's the most popular idea? Unpopular. Well, I think I'll tell you, when we came into this space, when we started working with circles a few years ago, we found already a preset culture in the market where businesses that provide platforms were charging license fees. So, if you work with a circle, they will tell you 1 user license is this much, and 3 user license is this much, and 10 user license is this much. When we came into the market, we defied that. And we were the first people to do that. There's a few other players now that have adopted it. We decided to go software as a service. So we were charging a fee for every account, and we're charging a monthly fee for every account on the platform. It was difficult initially to do that, but it's now become the thing, right? And I see a lot of other B2B businesses and companies providing enterprise platform adopting the same model. In the circle space, we were the first to do that here, and a few other people are probably following suit.
Thank you for the very unique questions. I had not heard them before. So I'll take the one about dreams. I actually do have dreams often, and I do ascribe a lot of importance to them, because I think, at least when I dream, whatever bothered me that day, I tend to dream about it that night. So when I see it in a visual way, it actually helps me understand myself. Like, why was I feeling anxious about that thing? Why was that meeting causing me a lot of fear? And when I wake up the next day, I do read importance into the dreams, and it helps me understand my brain better. But thank you very much for the question.
Okay.
The spirituality?
Sorry?
The spirituality side of it, you practice spirituality or abstractions on the abstract world, how does it contribute to your business? Or if it does, if you don't believe in it, it's okay?
I think there's other people that
Okay. We will come back to your question. There are a few other guys.
All right.
Before we go ahead, vehicle number UBK326V. UBK326V. Someone it's away. Alright. So now we are going to limit the questions to just one question. Just one.
Good evening, everyone. My name is Semagada Elvis, founder of Revision 8, utilizing learning materials for secondary schools, collaborating with teachers and students, both rural and urban areas. So, what interested me was the way that your platform actually users can access the platform without internet. So how can I integrate the same technology within my MVP?
So these solutions actually do exist. It's just that a lot of startups are not aware, but telcos do have. So for us, it's a bit unique because we have other kinds of collaborations with the telcos, but the real technology around it is reverse billing, right? So, of course, if you have other collaborations with the telcos, you can get the reverse bill zero rated for you. But that might take a bit of time, but the starting point is reverse billing. So if you go to a telco and just say you want your internet reverse billed, so they will just whitelist your IP so that everyone that accesses your platform, the bill for their internet comes to you, right? So for them, it's completely free to access. So it's great for user experience, right? But also it's low cost for you because they only bill you for the time they spend on your platform, not for anything else they're doing outside that, not for everything else they're using the internet for. So it's great. I think it's one of probably the smarter things the telcos have done with the internet for innovators and startups that we, unfortunately, most of us are not aware of. Yeah.
Thank you very much. Thank you very much. I'm a bit of a veteran of the game. I know Gerald, he's been my client before. But I'm a co-founder of a fertilizer making company. We produce high quality organic fertilizer that we are figuring out how to distribute to the last mile. So I have, unfortunately, two questions. The first one is, what keeps you grounded? It's important for us founders to know what keeps you going, even when things are not working. Why do you keep going? Then the second question is about the drop-off. You work with the NGO, you onboard the VSLA or SACO. They are doing really well. The NGO is exiting. What happens? What kind of conversation takes place? Thank you.
Okay. So two things keep me grounded. One is purpose, the other is legacy. And I think it's important for every entrepreneur to have these two things. I think entrepreneurship is already a lonely, difficult journey, right? Very stressful. No one should ever lie to you. It's fulfilling, but very stressful, okay? And there's a lot of very difficult decisions you have to make as an entrepreneur, and so many times you'd rather just give up and go do something else. So you need to have a strong purpose. There has to be that thing that keeps you drawn to the work that you do and the solutions you're building. For me, of course, it's financial inclusion. My mother, it's that thing that I keep reminding myself that, you know, if there's just one person that I need to make proud and keep happy, it should be her, right? So everyone needs that purpose. The second thing is legacy. Like I told you earlier, I wanted to build a story, right? And for me, that's the legacy I want to create. I want to give young Ugandan emerging entrepreneurs a good story to look up to, and I want that story to make it easier for so many other people that are trying to follow the same path. So I don't want to be one of the guys that failed. I want to be one of the guys that was really successful and how it opened doors and made things easy for other people. So those two things, the fear to fail and the fear to personally fail and to build a story, and the fear to achieve the purpose. For me, those are the two things that keep me moving. Now, in terms of NGO partnerships and thinking of NGOs as customers, so when I think about it, we have raised maybe about $5 million from NGOs alone in revenue, okay? Now, for startups, this is very good money to build your business, okay? You can think of it as revenue, or if you don't want to think of it that way, think about it as NGOs investing in your growth, right? So never think of it as just some free money floating around. Be very deliberate about it and see how you can use that money to really grow the business. Now what we do is that for every NGO, we give them at least 1 year timeline. So we know when we partner with an NGO that they will exit after 1 year. So after 1 year, we're on our own. So the task for the team is always to make sure that in that 1 year, we already have figured out how to commercialize with this group. If we haven't figured it out after that 1 year, drop them and move on, okay? Because you can't afford to just keep them on the platform if you're not making enough money from them. So we have 1 year to do that. And that's the mentality, and that's what we do. So, and so far that's been working quite well for us. Now we do lose some VSLAs, of course. That's always expected, but we keep just enough to keep the business growing. Yeah.
Yeah, well, next question. Yeah, well, thank you. Next question, my name is Margaret, a student at Mugger University, pursuing Bachelor of Commerce, active. And when I joined the year 1, that is 2019, I mobilized a group of 10 members and we started a saving. Right now we are around 9 million, but as time went on, we brought that idea of lending to campuses. But there are a lot of challenges and risks that we encounter. So I would like to know how your platform try to minimize those risks that are involved in lending at campuses. And next question.
Okay, so if you're in the business of lending, it's difficult to scale a lending business if you're not digital. There's a lot of challenges. It's costly, it's inefficient, and it's also risky. But secondly, I mean, especially if you're lending to campuses and urban-based people, this is a digital generation, and it only makes sense that you go digital yourself, because that one makes the services that you offer more attractive, improves how fast you can offer those services, probably will lower costs for you, but also, will help you be able to lower risks of lending. So for example, I'll give you an example. We are currently in the process of integrating with the Credit Reference Bureau to do better credit risk profiling for the people that borrow from circles and money lenders that use our platform. And this integration will make it much easier for them to do credit profiling and to be able to determine the risk profile of each of the customers they lend to. There's a lot of other things that I can't just dwell on at the moment, but it's almost more than necessary for everyone that is in the lending business to go digital. And it's now a lot easier to do that and more cheaper to do that than it was before. Yeah. Oh, okay.
Thank you very much for your conversation, Kevin and Gerald. Mine is really basic. When they were introducing you, Gerald, they said you are one of the inspired courses, I think development economics, or development and economics in the sort. But your business is run, at least 80% of it is IT based. So I don't know if you had any background and experience in IT or not, but my question is, how did you manage to run an IT-based business when you don't have the background? Thank you.
Yeah, so thank you. So I'm 100% a non-tech founder of a tech company, okay? I have no background in tech whatsoever. I see code the same way I see Chinese or Hindi. I have no idea how to read it, but I know it is wonderful, it's brilliant. I know that it's the future, all right? So for me, tech is a tool, right? It's a tool, it's the path. The end is not technology, it's just the means to the end. For me, the end is really increasing access to financial services. And I knew the day I started that the best and most efficient way for me to do that in a scalable way is to go tech. So I started at Outbox, a tech hub, exactly like this. And I used to work in there. I had a desk, and Outbox introduced me to a few tech people. And I used the same tactics that you use now, which is selling a big idea and selling a vision to people and rallying them to come help you build your product. So I was purely the idea guy. And I was using that same idea to get people to help me build the platform. And I spent most of my time actually just selling the idea, pitching. We participated in so many of the Outbox pitching contests. We won some of them. In fact, our first funding was from a pitching competition where we won about $6,000, right? And we used that to do a lot of other things. So, and I know so many businesses, some of them even here, are on the same path, right? And some of you probably are also non-tech founders. Now, I will actually tell you one thing. I feel, and it might be different, but I feel that the fact that I'm a non-tech founder actually benefits my business because it really allows me to focus on go-to-market. Because I've seen some tech founders struggle with go-to-market. Brilliant product, great tech, but they just struggle to take the product to market. The fact that I'm completely detached from tech really allows me to think about the product more from a business perspective and to really understand the customers and see how I can take the product to market. I was the company's very first salesperson. I'm probably one of their most valuable salesperson to date. And I think that it helps significantly. If you are a tech founder, I'm not saying you should learn to be non-tech or less tech. I think that if you're a tech founder and sales is not one of your great strengths, then you need to team up with someone that has that strength, because I think the ability to sell significantly benefits startups, either to help you take the product to market or even just raise money, because raising money is part of sales. And you need to be great at sales, whether you're tech or not, and if this is not your particular strength, you need to team up with someone else that has this as their strength. Yeah.
Take one more question. One more question. Our time is up.
Hello, I'm called Frederick, the CEO and founder of the Foundation International. Now, my question is related to funding the startup, the sales and value. Like I've heard very many people, especially around the ecosystem, saying that you have, like for you to fund your startup, that you have to get probably Ensibuuko, make him a co-founder. Some others have said that you have to ship your company probably to the US or to Nigeria, to Kenya, to the UK. So how have you done it? Thank you. That's my question.
I think we will answer this question, if you don't mind. I'll answer a little bit, one part of it, and Kaivan would help on the other. I think raising money is a trust issue. Yeah, I think raising money is a trust issue. I also think raising money is I think there's trust, and I think there's a language in raising money. So when I speak to an ITESOT person, there are things that I say that only they can get. You understand? Like, you'll get me because you are an ITESOT. They'll say certain phrases to you, and you'll be like, yeah, I get you. You get. And I think it's the same thing with raising money. I think people think that there's a general bias for investors to put money in white-founded businesses, but I think that because of the culture and where they have grown, they just get it. They know what to say and how to say it, that just, makes it easy. You understand? And it will take us a bit of time to really understand the culture. This, I think, also happens. If you see, Nigerians have been quite successful doing this. A lot of Nigerian founders are actually educated in the States, right? And they have grown up in that culture within those communities. They get it. They know what to say and how to say it. And a lot of us are really struggling with this culture. And I'm probably also a victim of that. I know a little bit, but I'm not really the expert. So I think that's one part of it. I think the other part is a trust factor, right? I think trust is very personal, and trust is something you have to earn, right? I think by default, when you are dealing with strangers, by default, you don't trust them. And they have to earn that trust and to give you a reason to trust them. And I think it's the same thing with raising money. By default, investors don't trust you. It's just default. And it's up to you to prove them wrong, right? And I think a lot of us startup founders are struggling with that. I think many of us don't know exactly how to press the trust buttons, what to say, how to say, what to provide, and how to provide it. And I think there are a lot of things that are important for investors. You know, how fast you respond to their questions, the level of detail that you provide. They're small things. You know, are you a detailed person? You know, if they ask a simple question, you know, what's your revenue? And you tell them, you know, very specifically, you need to be able to communicate revenue in ways that investors love to hear revenue. It's not just enough to say, oh, you know, we're now making about $200,000. $200,000. Is that all you've made this 3 years? Is that what you're making every year? Is that what you make every month? How much of that is recurring revenue? You know, how much of that comes from your primary core product? You need to be able to explain to that detail, because then they start to want to feel that you know your business, you're a smart entrepreneur, you know exactly what to say. You need to give them the detail they need, but also say it in a way that they love to hear, so that they don't have to ask the same question over and over again. Because when an investor asks you the same thing over and over again, they start to lose trust. They start to feel like, this is not the type of person that I want. And it's the same thing when they ask you any other question. When they ask you about the market and your competition, it's not enough to say, you know, we have 3 competitors. I hear this every time. I ask some of my fellow startup founders, so, you know, how's your competition? There are like maybe 3 people. Okay? And so, I think you need to be able to say, at the moment, we know 3, and this is them, this is them. This is our advantage over them. This is what we've done. You need to just provide in very concise, specific ways you need to be able to preempt the kind of follow-up questions they'll ask, and just provide that. And if they ask for you to share information, maybe send an email, give them, if they say, can you send me your financial projections? Give them access to your data room, so that they also have access to other kinds of information. Don't just send the Excel sheet, then wait for them to come to you for other things. Just say, can I actually just send you access to the entire data room? It also has this and this and that and that. And then you can pick what you want. I will make sure, you know, it's clearly labeled so you know. Something like that. Then they start to build trust and start to believe you. And that's it. And I always tell people that people invest in people. It starts with you first, right? And I also keep telling people, you know, great business is really just 1% the idea. 99% of that is the quality of entrepreneur. And you need to be able to show the investor that you are that quality of entrepreneur and that they can take a risk with you. So that's my thinking of it, but I'll let my great friend Kaivan, who has actually raised a lot more money than I have, answer that question as well.
Thank you, Gerald. So first, I think you should take more of Gerald's advice and not my advice, because I am one of those Bozungu co-founders. I'm very aware. But I think Gerald touched on a point that I agree with very much, which is that like there is a certain language in fundraising, but beyond that, I think all human beings, they trust their tribe mates more than other people. Right, and it is just unfortunate that most of the people with money, they also happen to be white. So if you're not white, it is difficult to get money, because they don't know where your village is, they don't know who your family is, they don't know how to find you if you run away with their money, right? Like they have these concerns. So something that I try to do is I try to blend with people of every culture. I've raised money from investors in Japan, China, from Uganda, Nigeria, Kenya, America, many places, because something I try to do is make them feel like I am part of them. The first thing I do in every investor meeting is greet them in their language. So for those of you who know me, I can greet in almost every language of Uganda. and it has helped me a lot because when people meet me in Uganda, they think that this guy, this Muyindi, he might be angry, he might not be so nice. I met other Muyindis who are not so nice, right? So the first thing I do is I disarm them by greeting them in Luganda or Ateso or Acholi or Ruchiga or whichever language that they speak. So first of all, they are shocked. They have never heard a Muyindi speak like me, right? And but then after they get over that shock, they actually open up to me more and they trust me more than if I had just been using English. So I do the same thing when I meet investors. I show them that I'm part of them. Like before you meet someone, you look up their profile, you look up who are the connections you have in common. Maybe you went to the same event one time, maybe you have a friend that went to that school. You have to show that you are like them, that you're not a foreigner. I also had the same challenge here. Like I tried many times to raise money from Ugandan investors, and they are the most difficult. They are the most skeptical. They never believe anything I'm saying, ever. I tried pitching border lending to Ugandan investors, and they pick it apart. They're like, first of all, border riders are thieves. You can never trust them. They will steal your bike. They'll steal your GPS tracker. They sleep around. I did finally succeed in getting some Ugandan investors, but I had to show them that, look, I'm here for good. I've been in Uganda for 6 years. I'm not leaving. Whatever those border guys do to me, I'm gonna figure out how to still beat them, and they will pay me well. So I think people in every country are tribalistic to an extent. Like I have raised money from Indians in Kenya who they invested in me because I look like them. And they also trusted my ability to run the business. But you have to find some way to become in common with everyone that you meet so that you earn their trust. Mm-hmm. So I think a lot of times why foreign investors don't put money into Uganda or Africa generally, they don't necessarily know how to assess the strength of a Ugandan founder. They don't know what are the top 5 companies that people work with, and if you worked at FTN, it means you're really good. If you worked at Motive, then it means you're like this. They're used to seeing people from like Microsoft, Google, Amazon, the big Western companies. So in the US where I grew up, it's well known like what are the good schools and what are the big companies, where if you go to such a place, it means that you're high caliber and people can trust you with their money. When people are investing abroad, they don't know how to measure you, basically. So they will look for any other external factors that might speak to your success. Like have you been a part of a pitch competition that you won, like Gerald did? For Rocket Health, Dr. Davis is a close friend of mine. The first money that they got was from Airtel in Uganda. They had done a pitch competition here. So they'll be looking for things that are like objective measures of success. Did you win in a competition? Were you the best in your school? Did you participate in some accelerator program? So the more of those things you can do to add to your startup's CV, like external validations of success, it helps cross this barrier, which is very real and very difficult, that it is hard for African founders to raise money from foreign investors. So I will still defer to Gerald. I have not had his experience of fundraising. I have some privileges there, but there's also been a lot for me to learn.
So this kind of relates to the definition of a startup that we have, where the word disruptive was used. And I would definitely say Gerald, your product is definitely disruptive now. But in the journey of going from MVP to reaching a point where you have that competitive or repeatable business model, what did that look like? And also, I'm also interested in like your talent acquisition journey. So, to clarify, when did you know that you had a viable product before you even got to the digital stage? What did that look like?
Okay. So I think that for a tech platform, a digital platform, there are different things. So I'll tell you, we started in Ensibuuko 2014. That's also when we started building this platform. In 2017, when we did our first raise, the investors did a tech DD take due diligence on the platform and say this is crap. Okay? So they said, we will invest if you're willing to rebuild the platform from scratch. And we needed the money. So we did that. So we started building a completely new platform, 2017, right? And it was ready, I think in, I don't know, 2 years later, 2019. And then we started migrating customers to the new platform. And then we ran into all kinds of issues. I was like, why did we even do this? This was such a bad decision. And then we spent an additional 2 years just stabilizing the platform, right? So, we lost a significant amount of time just trying to get the tech to a place where it was okay, right? But I think for a tech company, there are two phases. Usually there is the platform, the tech. There's the tech stage where you're trying to get the tech to be stable and acceptable. And then there is the service stage where you're actually trying to make money from the platform. And I think that those are completely two different stages of the business that require different skill sets and has different kinds of needs and has different types of challenges. The stage where we are now, it's not a tech stage. Right now, a lot of our time is spent on integrations. We are worrying about integrations. We're worrying about pricing. We are worrying about security. We are worrying about tax and a lot of other things and legal issues. So those are the challenges, right? But in early stages, a lot of the challenges is how can we build a platform that customers love? So understanding customers, the choice of technology, and there's a variety of tech languages you could choose from. And you have to make a decision on what's scalable, what's good for you, finding the right talent, and also making sure people are not taking your code and replicating the same product somewhere. There's a lot of those things, so many of them that I can't really exhaust at this point, but I would say for tech, I would say it's mostly acceptance. Product acceptance is the biggest issue. And at that point, you could either fail or be successful. If you pass the acceptance test, then great. If you fail to pass the acceptance test, then you might have to pivot, right? You might have to pivot and completely change the direction of the business or build something else or take a completely different direction. It's entirely up to you to figure out. But that's what I think.
I was already thinking that you're already commercializing. So I want that you help us, and I understand what that is, but, and I actually align with STI, Office of the President, STI department, on how they categorize, commercialization and ideation and all that. So I would want that you unpack that for us to clearly understand. My second question, again, the same question I asked earlier. Apart from fundraising, what is that one challenge you have faced mostly, and how did you overcome? Thank you very much.
So just to make it clear, we don't have anyone that uses our platform for free, okay? So everyone that uses our platform is either paying for it or someone else is. So in the case of SACCOs, they pay for the platform. They pay for our core banking system. We now provide, we are, I think, the largest digital payments provider for SACCOs. So mobile banking service, if you're on Airtel, or MTN, if you go to financial services, there's a SACCO menu there. We're integrated to that menu. We are in fact, the largest mobile payments company. Everyone, for SACCOs, everyone that uses that service pays for it. So we don't provide anything for free. For VSLAs, I think what I was trying to explain is that the person that pays in the first year is not necessarily the VSLA, but someone else pays. And the task usually for the team is to make sure that at the end of that 1 year, we transit from someone else paying to the VSLA paying by themselves. So we are commercial from day one. Who pays might vary, and it might change from time to time, but everyone that's on the platform pays or is paid for. Yeah, so I hope that clarifies it. Yeah. I don't think I remember the second question.
Another challenge apart from funding.
Apart from funding?
Apart from funding, what is that other biggest challenge you have encountered and how have you overcome?
So I will answer that question in two ways. At this stage, our challenges are different from what probably a lot of the startups here are faced with. Our challenges are probably at a different league now. But when we're starting, I would say the first 3 or 4 years of the company, besides funding, the platform, the challenge for us was technology. It was really, again, like I said earlier, making sure that the technology is acceptable. It's very difficult if you're building a tech product here in Uganda to get to a point where people actually want to use and pay. Those are two different things. Some people want to use the platform, but they don't love it enough to pay for it. And I think for us that was the goal. The goal was to build a platform that people love so much that they're willing to pay for it, right? And that was always a big challenge. And you kept running into walls every time you did that. And besides funding, that's probably was one of the most difficult things. And because we're still a young company, people are in and out of the company, so it's very, very challenging. And you're building features, spending time, resources, building a feature that no one will actually use. Like sometimes we spent huge amounts of, there's a time we spent, I think, $50,000 to build a feature that no one actually used, right? And we were convinced it was a good thing, right? We were like, man, when we launch this thing, it's going to be a big game changer. And it was a good lesson, yeah? We learned, in fact, for me, I was the kind of guy, I was a perfectionist. I didn't want to take a product to market until I was sure it was good. And you would spend so much time and resources doing that. Now I know that before you actually spend a lot more resources, you have to build small pieces. So now we launch small MVPs, and then we keep building based on whether customers love it or not. So we go really low cost, light on some of the features, 1 or 2 things, and if they love it, then we build it and make it actually good enough. So that's something that we learned, and probably one of the things that I won't do. I was a perfectionist, and it's probably this whole experience has put me in my place. I now know well enough not to be perfect with platforms. And please, always build for commercial from day one. I'm an anti-freemium model advocate, okay? I'm very anti-freemium model because I know how difficult it is to get out of that freemium pit, okay? And I completely discourage people from going freemium because people think, I want to give them the platform, and when they love it, I'll go back to them and say now they need to pay for it. They will never, okay? So please, if you can avoid it, just avoid it, okay?
There's something I wanted to direct that kind of on because I think it's very insightful, and people who are interested in lending might be also interested in it. Can you kind of explain debt financing versus equity financing?
Sure, thank you, Hannah. She's my better half, by the way. Mrs. Odongo. Yeah, thank you for your question. I think when people talk about startup funding, they usually mean equity. But actually, in the grand scheme of the world, equity financing is not the main way that companies grow. It is one of the ways that tech companies can grow, and both Ensibuuko and Asak have raised this in the past. But actually, debt financing or loans are much more common. I think in Africa, one challenge is that if you're getting the most common providers of debt financing are banks, and they're not very receptive to the needs of startups. They want 10 land titles just for you to get $1,000, and they have so many many requirements. But the ecosystem for debt funding is also improving. There are more investors who they would like to invest in startups. Maybe they feel that the returns on equity investing are too long of a timeline. Sometimes you wait like 10 years to get your money back. But with debt investing, the investor can get their money back in 1 year, 2 years, 3 years. So it's a growing form of financing, and just like venture capital funds, there are more of them that are aiming to deploy debt in startups. So it's also something you can consider to grow your business.
I just wanted to, just in addition, share. So we recently raised some debt money from Uganda Development Bank. It's the first time that we actually raised money from a local bank. It took 3 years for that money to finally come. But I thought what would be useful to share is the experience of how we eventually made it happen. So when we went to them initially, we said, we want some money. At that time we were just launching our, besides the digital infrastructure, we now operate an in-house microfinance program, microfinance business, where if you're a SACCO or VSLA that uses our platform, we have built a completely digital lending solution that allows them to access loans to further capitalize themselves. And we went to UDB and said, we've started this thing, we need money to capitalize it so that we can lend. And they said, oh, brilliant thing, that's good, let's start the DD process. We went through that entire process, crazy stuff, and then they'll go quiet for like 4 months, 5 months. You'd send emails and no one responds. So we did 2 things that I think were, actually 3 things that I think were very, very useful. The first was that we then, we got into partnership with UNCDF and FAO because we knew UNCDF and FAO already partnered with UDB, and FAO had already provided some money to UDB and had a huge, large project with them. So instead of pursuing UDB, I pursued partners that I knew UDB listened to. And I pitched my entire business model to them. And UNCDF actually they decided to give us some funding. They said, listen, the platform needs to be solid. You need to already have a digital lending algorithm, so we will finance you to design the digital lending algorithm. So they gave us about $250,000 to do exactly that. And then they said, now we will set up some meetings between you and UDB along with FAO so that they can appreciate and understand the things. So when we went there, we pitched, and we got audience and all of that, but it kept dragging and promises. Initially, we went with them and said we want a line of credit of about 5.4 billion, and then the money kept reducing, and then they gave us a term sheet that had all crazy sorts of things. They had never done typical debt financing, so they treated us the same way they would treat anyone they were lending money to, asking for collateral and all these sorts of things. And we had to work with these guys to educate them about debt financing and lending to startups and all those sorts of things. And then we got exceptional approvals, and some of these things getting waived off. And then they were supposed to have provided us money by the start of last year because we wanted to pilot some digital loans for VSLS for the agriculture season. And they said, go ahead, train the groups, get them ready, the money will be there. And the time was ready, the money wasn't there. So I ran to some of my investors and said, listen, UDB is a huge bank. They are interested, but they need a proof of concept. Because I figured out these guys just probably thought this was a risky thing. So I raised $150,000 from my internal investors and did a proof of concept. So we started lending using our own investors' money. So we did 2 rounds of loans. They were seasonal loans. We did a whole 150, and within 12 months, we had 100% repayments. Our PAR 30, portfolio at risk 30 days, was 0%. And every quarter, I had meetings with UNCDF, FO, and UDB to show them this progress and results. And eventually, I received a call from the CEO. She said, can we have a meeting? So I went in there, had a meeting with her, and she said, so we're going to give you the money, but people will never know that we're behind the thing. So what can we do? Because, you know, the government needs to know that we are doing something good. So what can we do? So I had to give her a complete PR plan and said, we're going to co-design a product with you, and we're going to do a mega launch. So we did this mega launch in Yumbe. We didn't have the money then, but we did a mega launch with them. The minister was there, everyone was there, and after that, they wired the money. So that's exactly what happened. But we raised our first debt financing this year, actually, from UDB, and it was a whole lot of crazy process. Yeah. So I thought some of you that are hoping to raise money locally, especially from banks, what I learned overall is that you need to align your value proposition with them. The pitch to UDB then was that they were under a lot of government pressure to provide loans to smallholder farmers because people were accusing them on only financing already established people. So I told them, I'll help you do that, right? I'll get this money down there. You've already seen what we can do with our own money. So you provide the money through us. We'll tell everyone that you are the ones doing it, right? And they love that value proposition. They took me all over the country, introduced me to Salim Saleh and to all these sorts of people and said, this is our digital lending partner. We're working through them to now support smallholder farmers. I just started dancing to their music. And that's exactly how it worked. Yeah.